Hey San Diego and La Jolla, California, this is Justin Brennan logging in for a video blog. So my end of the year summary here in San Diego, 2010 market update, and then going into 2011, kind of what you can expect happening in the San Diego real estate market if you're looking to buy or sell your home. Overall, total homes sold. We are about 14% off year over year from last year to this year in terms of total homes sold. If you look at month over month, we're down about 10%. So if you take November numbers last year to this year, we're about 10% off from where we were a year ago. However, because of the strong first half of 2010, we're going to end up with total units sold about the same. So 2009 is going to compare pretty evenly to 2010 projected total homes sold. If you look at inventory levels, right now in San Diego County, there's about 16,000 homes that are on the market right here going into November and December. And if you take a look and you break that apart, 42% of those 16,000 are short sales, 9% are bank owned, and the remaining 49% are traditional sales or investor flips. And that's kind of how you'd break down the market to see what's really going on in terms of distressed sales versus traditional homes. I'm going to pop up a chart right now. What this does is this shows you by price point how many months of supply of inventory is on the market. What you'll notice is anything under 600,000, we have a below average months of supply. An average market is considered 6 months. We're about 5 to 5.5 months of supply of inventory under $600,000, which means those prices are still stabilizing. Some stuff's going down a little bit, but overall we're moving inventory pretty well. What you will notice is anything above 600,000, you have an oversupply of inventory in the market. Hence, prices are coming down. And I think the number you notice the most is that 23 months of supply for anything $1.2 million and above, which means a lot of the homeowners in La Jolla, Rancho Santa Fe, a lot of the upper end areas of Del Mar, you're going to see some price declines and continuing declines throughout the next year. So prepare for that, especially if you're going in to make offers on some of these homes above 600,000. Take it into consideration in your proposal and understanding really what's going on with the market dynamics. So this is a really good chart to see supply and demand. Obviously that helps understand price levels and what's happening in the market and market momentum moving forward. If you look at foreclosures, and I'll pop up another chart. This is showing total notice of defaults and notice of trustee sales for the year, going back all the way through 2004, 5, 6, all the way up to 2009 and 10. We're at about 2,000 foreclosures per month in San Diego County, and it's been pretty consistent for many, many months now. So we're going to end up with about 24,000 foreclosures for 2010. And don't expect that to really drop. We see it pretty consistent. You'll probably see an increase in that, you know, coming into the first quarter of 2011. Everybody's talking about the shadow inventory. Understanding from my background with asset management with Chase and Fannie Mae, a lot of these banks are going to curtail the inventory that comes on market. And they're really going to watch it closely because they know if they continue to flood markets, guys, it's a never-ending story. Then you have people strategically defaulting, like people are doing now because they had equity and now they don't. So they're sitting there going, well, what do I do when I'm 30, 40% underwater now? So banks are being careful. They're watching the supply and demand and making sure that we stay in balance as much as possible to keep these markets stabilized. If you look at the building permits in San Diego County, we're about 80% off from the peak in 2004 and 2005. That's going to continue. And don't expect that really to improve for the next 3 to 5 years until we get through all of this distressed inventory. We're going to bounce around the bottom. You're going to see good news, bad news throughout the headlines and a lot of the newspapers and the media and everything you're going to see. We're going to bounce around the bottom, guys, for the next 3 to 5 years. It's just the way it is until we get through all of this distressed inventory and start to really stabilize and get back to a normal traditional market that we're used to. So don't expect building permits to see any massive increases over the next several years. We're going to be pretty flat. You'll see some home builders building some homes here and there, but on no massive level until the distressed inventory kind of weeds itself through the marketplace over the next couple of years. Economic highlights. Unfortunately, the unemployment rate did pop up a little bit over the last month. We're at about 9.8%. from where we were at about 9.6. So no major change, but it did increase. We'll watch that as we go into the first quarter of 2011. and overall consumer debt, revolving lines of credit, credit cards. You're seeing still a massive deleveraging in the market, which is good. Either it's by way of bankruptcy or consolidation. I mean, that's probably why bankruptcy attorneys are doing so well, and consolidation companies and stuff. You hear those ads on the radio and through TV all the time. So there's a massive deleveraging going on through people's credit cards and debt and all that other stuff, which is a good thing. And it's continuing, and it'll probably continue throughout the next couple of years. So that's kind of what's going on in the San Diego real estate market through 2010. So overall sales are gonna match that of 2009. Expect some price softening going into 2011, especially for the price points above 600,000. So if you're in those price points, just kind of watch the market, get with an expert that understands and can kind of give you a real good market analysis of what's going on before you either make any proposals on homes or before putting your home on the market, to really know what the market dynamics are to best position the home for sale. And just realize that we're going to be dealing with foreclosures for the next few years. Hopefully we'll stay at those levels around 2,000 per month, so that way we can absorb it and it doesn't kick up inventory levels. And get excited for the upcoming year. I mean, it's a dynamic market. A lot of things are changing all the time. If you want some more information, or if you want some help understanding how best to position yourself in this market, give me a call. Go to my website, thelajoyalife.com, get my contact information, give me a call. I'd love to help you out and help anybody else out that you may know. So until next time, have a great end of the year, and I'll see you in 2011.